All right, there's some fresh data from the Bureau of Labor Statistics, and it shows the Producer Price Index, PPI, was flat in September. Dow Jones economists predicted a 0.1% increase. CBS News contributor J.D. Durkin joins me now with more on this. Heading into the break, J.D., I admitted I don't really know what this means as far as our wallets. I will never act smarter than you on these topics, so help us understand what this data means for what we purchase.
Errol, in the simplest terms possible, we get consumer price index. We got those figures yesterday. That's the measure of inflation on all the things in the economy, Errol, that you and I directly spend money on. That's consumer prices. What's the inflation for eggs and apples and so forth? But wholesale prices, PPI, is the measure of inflation for the companies we're buying from. So think about a company like Home Depot. How much money is Home Depot paying year after year for the lumber that they need in order to sell to us? And it gives us a gauge about how much these corporations and companies are paying, that they might end up kind of pushing those costs down to consumers. So a bit of a mixed bag between yesterday's consumer inflation print and today's wholesale inflation print. Overall, I think right now what we're watching is the stock market react to the ongoing potential soft landing scenario. Errol, as you and I are having this conversation, we're right about at all-time highs for the S&P 500 and a comparable story for the Dow Jones Industrials as well. I think the soft landing scenario has been reinforced by the central bank. I spoke with one economist who told me the fact that the CPI inflation print yesterday was a little bit hotter than expected, not a big deal, but if we continue to go into November, December, into early 2025 and still see that some parts of inflation are a little more stubborn than the Fed would like to see, we can expect the central bank to maybe pause it a little bit on interest rate cuts. But the expectation is still that the Fed will continue to cut interest rates, Errol.
Okay, great. I was going to ask you about that. And I'm glad you mentioned, JD, that just because consumer prices may be up and producer prices may be flat, it doesn't necessarily mean we as the customers will experience those flat prices. Some companies continue to price gouge, according to the Biden administration anyway. But talk to us more about the potential of interest rate cuts and how this and other data factors into it.
Look, the U.S. central bank, Errol, has been very clear for the last few years. They say we are not going to cut interest rates until we feel confident that inflation is close to 2%. It is close to 2%, but it is not quite at 2%. And so we're in a little bit of a wait and see territory. Of course, we're just a few weeks removed here from the central bank taking that massive cut of interest rates at what we call 50 basis points, just a fancy way of saying 0.5% off the federal funds rate. And that is good news, I think, for most Americans, right, who want to see a little bit of relief of pressure. We want to see those borrowing costs come down across the U.S. economy. If you have these credit card bills, you want to see those interest payments come down. So for right now, it's wait and see. Seems as if we're in a good scenario for the Fed to continue those interest rate cuts moving forward. And that means a lot of relief for everyone watching at home.
And that is good news. JD, final few seconds. Anything cool planned for the weekend?
Yes, I'm going home to study more economic data because it's that time of year, Errol.
Thank you, J.D. Durkin. Have a great weekend. We'll see you next week.